In this video, I'm going to share with you exactly how my wife and I were able to purchase over $1 million in real estate by the time we were 25 years old. Actually, I think it was by the time we were 24. But you know what? Let's go with 25. We already said it.
I thought of something funnier than 24.
Let me hear it.
25.
Look, I want to make it as clear as day. We are not trying to flex in any way possible.
Look how vascular I am, Brian.
As I start this channel and this journey to financial freedom, I think it's very important to show our viewers exactly where we came from, exactly what we have, and be as transparent as possible. Honestly, I think this is a very attainable goal for a lot of young individuals. A lot of you may be thinking, look, they came from a lot of money, they hit the lottery, they did something crazy, but that's not the case. My wife and I were just very dedicated to our goals and we're willing to sacrifice for that. Last thing I want to point out before we get into the video is that just because you own $1 million worth of real estate does not mean that you are a millionaire. We took out a lot of debt, we did a lot of low money down and borrowed a lot of debt against these properties so that we can get into them. So even though that the value of the assets are over $1 million, that does not mean that we are actually millionaires. I'll get to that later in the video. So let's go over just a quick timeline real quick. In 2019, while we were in college, my wife and I purchased a duplex. We had no money, we were in college, and we did a seller financing deal to be able to get this. In December of 2020, my wife and I actually purchased a house hack that was a 4-unit apartment complex. In December of 2021, we actually purchased our personal residence, which we plan on actually turning into an Airbnb. There'll be a lot of videos on that, so actually go down, hit the subscribe, hit the like so that you can stay tuned for that and see when those videos come out. And then lastly, just this year in 2022, my wife and I purchased a duplex. Since purchasing all these properties, we actually ended up selling off the very first property that we purchased, so we no longer have that. So our portfolio only consists of 3 properties. And that's why I'm trying to stress right now that I think that's very attainable. I'll go over all the numbers with the properties. I'm just trying to stress that it's very attainable to own $1 million worth of assets in real estate, no matter what age you are. Now that the timeline is over, let's get into the nitty-gritty of actually what these properties look like, how much they're making, and how much they are worth. So just for the purpose of this video, the first asset that we actually purchased, the duplex, we are not going to go that in depth with it just because we no longer hold it, but I think it's important for you to know exactly how we got started. So with that, we purchased a duplex in 2019 while we were in college. I was playing basketball, my wife was playing volleyball, and I got into real estate, I got the bug, and I was like, you know what, I need a deal. But we had no money, we had no jobs, so I really needed a seller financing. I saved up as much as we could, and I ended up buying a duplex that was worth $65,000, and the seller actually seller financed it, which means that they assume the mortgage. They basically are the bank, and I pay them every month instead of the bank. That way, I don't need to show that I have proof of income and proof of job to a bank. I just have to pretty much build rapport with the seller, and he's willing to lend me the money for that. A lot of you may be asking why the seller would do that. It's just they're able to earn interest on their money, and instead of taking all the money, maybe taking capital gains against that money, they just lend it to other people at an interest rate, and they're able to make money. The purchase price of that was $65,000. I only had to put $6,500 down, and it cash flowed around $400. So it was a pretty solid first property. But like I said, since then we sold it because we are just focused on a different market now. And our criteria now just is a lot different than what it was before. I was looking for anyone just to throw me a bone.
Throw me a frickin' bone here.
I think any property that came to me, I would have said yes to, which is not how you should invest, but I was just hungry for a deal. Okay, actually getting into our portfolio now. In December of 2020, my wife and I purchased a house hack. It is a 4-unit apartment complex. We lived in 1 unit and we rented out the other 3. The benefits of house hacking are that you're able to have your mortgage be paid down by the tenants. In this case, we actually were making $800 while we were living there. Today, it was honestly the best financial decision that we could have ever made. I highly suggest that you all do it as well. And if you want to learn about house hacking, I'll go ahead and put a link in the description to a video that I made before talking all about house hacking and why you should do it. We purchased this property for $430,000 and we had a $5,000 seller contribution. Seller contribution is basically when the seller puts $5,000 towards your closing costs as the buyer. That way it just limits the amount of money that you put down. We moved into the property. The property was distressed, it was mismanaged, and the tenants there were not keeping up with the property. They were actually smoking in the units, they were tearing it apart, they were punching holes in the walls. It was a big mess, and honestly, we got way over our head. We thought we were gonna go in there, start managing, and start evicting people because they weren't paying and they were damaging the property. But we were not caught up on the laws and regulations of being a landlord, and that's what really screwed us. So word of advice, don't be like us. Study the law, study what you can and cannot do, and that way you're a lot more confident going into a property where you have to kick people out. So after thinking that we were going to manage the property for a week, I think it was a week after we purchased the property, we hired our property manager. To date, that was the best decision we could have made. He came in there, he is an absolute hero, and we love him because of that. He just turned that property around. We couldn't have been happier. So after getting out the tenants, we had to go in there and actually renovate. This is one tip that I will definitely say to you, is that if you are house hacking, if you are purchasing a property, make sure to put aside for renovations and pretty much over budget for it, because my budget and what the actual budget was so far away from each other, it wasn't even funny. So with that being said, that's one big learning lesson that we learned, but we got through it. We renovated all the units. At the time of purchase, it was $4,400 that was coming in each month. That's $1,100 per unit. But after renovating the units and putting new tenants that respect the property and that are a lot nicer and making the units a lot nicer, we were able to receive $5,600 in market rents. And after you account for our principal, interest, taxes, insurance, utilities, everything else that goes along with the property, we net $2,000 per month on the property. Also, we refinanced into a conventional. So with that being said, the property is worth a lot more now. At the time of refinance, we got an appraisal back for $505,000, which is $75,000 more than what we paid for it. But I also think it's a little bit higher. I'm being conservative with this number. That's what we got back. I think the appraised value should be higher, but it is what it is. They used comps from about 2 years ago and their rents wasn't as high as ours, but as you may know, 2 to 4 units are the same as single family homes, where they go off of comparables, not how much the property actually makes. So with that being said, the 4 unit makes us about $2,000 net per month and is worth $505,000. Almost exactly 1 year later, we purchased a single family home so that we can move out of the house hack and rent that other 4th unit. This property is honestly like 10 doors down to the 4 unit, and it's in the same town. We absolutely love it, and we love that we have our own space now. Looking back at it, I wish we did go after another house hack, but I'm extremely happy with this property because the goal going into it is that we're going to fix it up, renovate it, and pretty much turn it into a short-term rental, which I plan on making a lot of videos about, so make sure to stay tuned, hit the subscribe button so you can see more about that. For that property, we put a 3% down conventional loan so that we can move in. After accounting for the $15,000 seller contribution that we received, we only had to put about $7,000 down to move into this property. The appraised value of this property is $265,000. Since then, a couple other comps in the neighborhood have sold around $310,000. So I think that really pushes ours up. I don't think it goes all the way to $310,000, but I think around that $285,000, $290,000 range. But we're gonna be conservative here and just account for what we purchased it at, which is $265,000. Currently, the mortgage is $1,500, and in hopes of the Airbnb being successful, we make a lot more so that we can cash flow on that property, but more to come with that. And just earlier this year in March, we purchased a duplex with the seller financing. Now that was a very cool deal. I love how we structured it, and it turns out being absolutely amazing. So if you want me to make a specific video on that property alone about how we structured it and did the seller financing, make sure to go down in the comment section and let me know. This property was on the MLS for a while, so we thought we'd go ahead and try our luck and offer list price, but the seller would have to cover 25% in a seller carryback seller finance. Now, when you go to a commercial bank, they'll allow you to count that 20% of seller finance towards your down payment. The bank that we went to actually told us that we need 25% down, so after it was all said and done, we only put 5% down on the property. Now get this, remember that 4 unit that I just talked about? We were able to pull a HELOC out of that, which was $25,000, and that covered the down payment and the closing costs of this duplex. So essentially, we had zero money into the deal. The best part about it is that the rents were under market. At the time, the rents were $1,200 and $1,100. We went in there, we renovated, put a lot of money into both the units, and now that property is renting at $1,450 and $1,350, which is $2,700. A $400 increase per month just after going in there and renovating a little bit. The way we structured that seller financing was that the seller was going to finance 20% of the purchase price at a 4% interest rate, interest only, for 5 years, and then we'll do a balloon payment. So basically all we have to do is pay the principal, interest, taxes, insurance, utilities, an additional $200 per month to the seller. From that property, we are netting $700 per month. So having absolutely $0 into the property, I think it was a very good investment. And the area that we purchased at is only going to grow and expand, and the values are only going to go up. A lot of people will say, well, aren't you scared of about 5 years if the interest rates have risen? The amount of rent that it's bringing in right now and the projected rent, I'm fully confident that we're going to be just fine. So the purchase price and the value of that property was $270,000. So all in all 3 properties are worth over $1 million. $505,000 for the 4-unit, $265,000 for the single family, and then $270,000 for the duplex. All in all, our assets are worth $1,040,000. Now, in all transparency, we do owe $917,000 to the banks of that $1,040,000, but we are really strong cash flowing, so we feel very comfortable in the position that we are in. Now, a lot of you may be saying, man, that's a lot of money you owe to the bank. Aren't you scared? Yada, yada, yada. Honestly, no, we're not scared. That's what you have to do. You have to buy cash flowing assets, and in turn, you're going to have to take on debt. So that's how we've been able to do it. With these low money strategies, though, we've been able to acquire $123,000 in net worth because we borrowed against these properties and because appreciation and now what they're valued at now. So do I regret taking on the debt? Heck no, not at all. And I will continue to do that so that we can purchase cash flowing assets so that we can eventually get to financial freedom. You know what? I want to hear from you guys. What do you prefer, appreciation or cash flow? Put it down in the description. And that wraps up the video. Thank you everybody for listening and watching this video. I appreciate everyone that does so. It is very attainable for you to go out there and purchase $1 million worth of real estate. Honestly, any real estate. I think if you buy a cash flowing asset, you are in the step in the right direction, and I know that you guys can do it. Anyone can do it. I literally graduated high school with a 2.3 GPA, so my mother is very proud. But with all that being said, thank you everybody, and I will see you in the next one.